Yeah, so yesterday we saw an ADP private sector number that was really strong, close to 500,000, and the markets freaked out. They thought that, oh my goodness, this could mean the non-farm payrolls is going to be really, really hot. Does the Federal Reserve need to hike even more than two times in the remainder portion of the year? And so we saw a sell-off yesterday, and today's jobs number came in just slightly under expectations, which kind of calmed those nerves. So I think that, again, gives the investor the green light to say, okay, the Fed may still hike a little bit more, but there's probably, if the jobs numbers are getting a little bit weaker, maybe there's not incentive or the want by the Federal Reserve to continue to hike much more past that. So I think it's like it essentially opens a light at the end of the tunnel.
Hello and welcome to Money Talks. In today's video, Gareth Soloway talks about the latest updates on inflation, his new prediction for Bitcoin, and when Bitcoin will break the $30K level. So without further ado, let's get started with the video.
No, and that's the amazing thing about it. So these calculations and figuring this out go to charting and go to many, many technical things. And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand. And you're right. This is what we were talking about a month or so ago when we last talked, and we still have not been able to do it. So for me, I'm looking at this 30,000 low where we've been going sideways now for about 2 to 3 weeks, and the $31,000 high. And we're basically staying within this range, $1,000 range. And I'm looking to see which way does it break. If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000. If we can break above 31 and again, hold above 30,500 for 5 consecutive days, you should head to about 35,000 on Bitcoin. So the level goes all the way back here, right? So you have to go back all the way to the cycle, the bear market or the bull market cycle of 2021. And it's connecting as many pivot points to the daily closes as possible. And again, that's what the line kind of comes out to be. So right at that 30,500 on a closing basis for 5 days, 31,000 would be a good breakup again if we got to close above that. But yeah, it comes into just technicals and just finding these chart levels. And it's amazing how a lot of people talk smack about technical analysis, but again, we can see how this level just is a level. I mean, if no one's listening to me, I mean, maybe a few people are, but overall, this is big money kind of controlling this level here on a technical basis, and it shows right here. Yeah, so I think there's this overall feeling that nothing can take us down, and there's some songs that mimic that and kind of talk about that. But when you get this momentum in a summer when the volume is light, it tends to be a mob mentality, and I think the markets continue to float up until something cracks or breaks. And I think again, the labor market at 206 was it or two something like that, was a little bit better than expectations, but by no means was it a bad number. And I think that's the key. As long as it's kind of this Goldilocks, the market can continue to float.
Bitcoin's price gave back some of its recent gains this week, but multiple data points suggest that $30,000 should hold as support going forward. Bitcoin remained within a narrow 4.3% range for the 15 days leading up to July 7th. Despite the proximity of the $29,895 to $31,165 range, investor sentiment was significantly impacted by an unsuccessful attempt to break above $31,400 on July 6th. Traders' tendency to overreact to short-term price movements rather than Bitcoin's year-to-date gains of 82% could be part of the reason for the short-term correction. This same rationale applies to the events related to other cryptocurrencies. At the forefront of investors' minds are questions about whether the recent price gains were solely driven by multiple spot Bitcoin exchange-traded fund (ETF) requests. Other pressing developments include Binance's chief strategy officer, Patrick Hillman, and other top compliance officers reportedly leaving the exchange on July 6th over CEO Changpeng Zhao's response to the United States Justice Department's investigation. On June 29th, the crypto exchange also informed users that its Euro banking payment gateway would cease services by September, potentially halting deposits and withdrawals via SEPA bank transfer. Meanwhile, the yield curve on interest rates reached its deepest inversion since 1981 on July 3rd, reflecting the 2-year note's 4.94% yield compared to the 10-year note trading at 3.86%, the opposite of what is expected from longer-term bonds. The phenomenon is closely watched by investors, as it has preceded past recessions.
Number one, it's the even number of 30,000. So when you go from the 20s to the 30s, there's going to be some sort of factor where people who held all the way down to 15,700, there are people now that are getting back to these cycle levels that were major on the last cycle that are saying, all right, I'm getting a little nervous here. They're more likely to sell. There's also other people that bought at 15,700, 16,000, and now they're up a full 100%. And we know that even numbers tend psychologically to make people say, okay, listen, I'm up 100%. I'm going to sell and take some profit. So there's multiple psychological factors going on here, technical levels, psychological. And it is amazing to watch how the market has struggled at this 30,000, 31,000 level. No doubt about it, right? The S&P 500, the obvious one would be the all-time high, right? If we just go up to that all-time high. But there are technical levels that on a psychological basis play out. And in fact, let me show my screen here, looking at the technicals of the S&P. And there's this trend line that has been major going all the way back to the COVID low. And what we can see here is on this first major downshift, we came right into it. And if I zoom in, you guys can see how it kind of played right there with that level, bounced off, came back, hit it again, then broke below it. And then look at how underbelly of that level kept on hitting. And sure enough, right over here, we can clearly see that right there, that's where this market has run into pressure. Well, I think Bitcoin it's a little of both, right? So you have the AI narrative with stocks like NVIDIA and so many other companies. I mean, you could go back in a lot of the conference calls from last quarter and check how many times AI was mentioned, and there's a correlation to how high the stock has run based on how many times it was mentioned in the conference call. So there's a lot of things like that going on where you have the momentum driven. I do think there was a lot of money on the sidelines. Again, the light volume summer months are generally months that can be driven by the retail crowd. And so you're seeing a lot of money that was sitting on the sidelines come in. And I think on the other side, you have Bitcoin where, yes, we're starting to get some clarity for Bitcoin alone. We see Bitcoin dominance pushing up above that 50% level, and the BlackRock news, the Fidelity news on a spot ETF. So it's positive. It's just still kind of a question mark, you know. So I think that's where you're struggling on Bitcoin at this point. By the way, I also think that you have to look at the M2 money supply. You have to look at how much liquidity is in the market. Liquidity keeps dropping off in the entire system, not just the stock market. Stock market is one thing. People are still willing to chase, but M2 supply has really fallen down here. And there's a correlation between M2 and what risk assets do. You're seeing this kind of opening, and I know Ben Cowan and I have discussed this quite a bit in the no-shill zone. You have this M2 and stock market diverging, and what that does, folks, is it tells you that at some point that mouth has to snap shut, whether it's M2 rising to meet the market or the market's falling to meet M2. Yeah, so I think the headline number is what's driving the retail crowd. And interestingly enough, early in the day, we did see the markets down a little bit. And I always look at the early action in the stock market as being institutional, right? That's when the most volume is present so that they can make their trades. And so I think, again, the institutions are playing it a little more carefully here, where they kind of sold into this little bit of a move here. And now that they're done for the day, it's a Friday in the middle of summer. I mean, every big institutional trader's already gone for the day at this point by midday on a Friday. I think the small investor bids the market up. And the question is, how much higher do we go? I actually think that the jobs numbers at this point are making a turn. We've seen the unemployment numbers or the filings for unemployment start to spike up a little bit over the last few weeks or so. And I think that's a new trend that's starting. So I expect the jobs numbers to continue to get weaker.
So, what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.